Gold's up, silver's up, as the Syrian government collapses. What can we expect to see in the economy this week? Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. The most highly anticipated data release this week is November's Consumer Price Index, or CPI, which the Labor Department will unveil on Wednesday. November's CPI is expected to show an annual inflation rate of 2.7%, slightly higher than October's pace. Core CPI, which excludes volatile categories like food and energy, is forecast to remain steady at 3.3%, the same level at which it's been stuck since September. Thursday brings another key report from the Labor Department, November's Producer Price Index, or PPI, which tracks price changes at the wholesale level. The consensus projection is that headline PPI rose 0.3 of a point on a monthly basis in November, which would be 0.1 of a point faster than in October. Annual PPI is expected to have accelerated last month as well. Economists are looking for it to come in at 2.5%, which would be 0.1 of a point faster than the pace set in October, and 0.6 of a point faster than where it was just 2 months prior. Other data we'll be watching this week includes the National Federation of Independent Business Small Business Optimism Index for November, which comes out on Tuesday. Economists expect to see that the index landed at 94.1 last month, which would be 0.4 of a point higher than the 93.7 posted in October, as well as an increase for the third consecutive month. It also would mark the 35th month in a row the index comes in below its historical average of 98. Also this week, the European Central Bank will announce its latest monetary policy decision on behalf of the Eurozone. The ECB is widely expected to reduce interest rates by another quarter point. It would be the ECB's fourth cut since June, bringing the key deposit rate down to 3%. With signs of trouble in the Eurozone's largest economy, Germany, and rising political uncertainty in France, many analysts now predict the ECB will execute 5 more rate cuts in 2025. Finally, on Wednesday, the Treasury Department will release the November edition of its monthly Treasury Statement, which keeps the nation up to date on the running total of the budget deficit for the current fiscal year. The previous report, issued in October, showed a shocking deficit of $257 billion, nearly 3 times the amount reported in October 2023. The figure, the largest first-month deficit since the global health crisis, raises concerns about fiscal year 2025 already heading towards significant deficit growth. For context, the 2024 fiscal year ended with a staggering $1.83 trillion deficit, the third highest annual total in U.S. history. That's all for now. Make sure to check back with us on Saturday when we go over what really happened. This is Devlin Steele for Augusta Precious Metals, signing out.